The Hang Seng is up just 0.1%.
Indian rupee, because of the strength of our macroeconomic fundamentals, is holding out well.
Any rally today in the first hour would be vulnerable to be sold into.
Capital allocation or misallocation, as brokerages put it, would have definitely led to a valuation derating.
Total cards is up 2% month on month. For the industry as a whole, it has declined by 2.8%.
First dates are in, the Nifty is up 100 points.
I still expect India to be an outperformer in context of what's happening globally.
When you look at the equity market basket, you have rotten trends everywhere. So many markets in the world have made new lows for the year, which is obviously not a good place to be in. And India pretty much was the apple of the eye for most market participants.
It is not a concern, and is the view which you are expressing is overblown.
Currently, as we speak, we are trading below the 17,000 mark and hovering precariously close to our 200-day moving average of 16,992.
Today we've seen many of the Asian currencies, or at least a handful of the Asian currencies recovering. The Indian rupee has recovered, so has the Thai baht, so has the Korean won.
As we speak, the Nifty is above 17,100.
Good afternoon and welcome to Closing Bell. I am Anuj, with me, Prashant and Nigel. As you would have sseen through the tape today, the market has seen 3 or 4 intraday rallies and all have been sold into, starting with the first rally, which we told you in the morning as well that would be vulnerable to be sold into. But there was a second rally and that's also getting sold into now, especially in the financials, where the bank Nifty is now down 266 points. The currency has taken a bit of a turn for the worse, and a lot of individual names have seen some bit of price damage. Though I must say that today, at least, the broader market has managed to hold out much better than it has done over the last 3 or 4 days. The advance decline is in favor of advances, and there are pockets like the city gas distribution plays which are doing well. There are a couple of cement stocks which have bounced back. A couple of FMCG names have done well. A couple of auto names have done well. But it's just that the weight of financials right now is perhaps a bit too much, especially if you look at the broader indices. But for now, let's see what the last hour brings for us. Prashant, Nigel, hi, good afternoon.
Afternoon, Nigel. No, absolutely. I mean, I think it may work in reverse as well. The point that US and the rest of the world continues to sink and the market here continues to surge, which has been, of course, a norm for many days. It may so happen, at least for the very short term, that there is a bit of a catch-up. Now, the market here does not have to fall very much. Other markets also pulling up a little bit. That also will reduce the gap between where we are and the rest of the world is, just in terms of sheer performance. So we'll wait and see. US futures are higher right now, indicating that maybe, after getting to within a whisker of the June lows last night, there may be a little bit of a bounce. I was looking at data which basically tells you that in June, where the US market bottomed, it bottomed exactly 2 days after the June FOMC. Last week we had the September FOMC, and we've had 4 trading sessions in the US, and we came within 8 points of the June lows. I mean, is a bit of maybe even a temporary, momentary kind of a bounce possible entirely. But that's in the US we're talking about. Here, we are sitting on a lot of outperformance, and even this, what we're seeing right now, is not very much. From the highs, the market is getting sold into, but there is no big sell-off. Yesterday, of course, there was. Today, it's much more measured. Only intraday from the highs is what we are seeing. Nigel, hi.
Well, good afternoon, gentlemen. I think the rupee as well, it was seeing a bit of a pullback today. And as we speak, I think it's back towards the low point of the day. So maybe an intraday chart of the Indian rupee as well will give you a better picture. Yeah, it's moving back towards that 81.60. Earlier today, it was moving towards that 81 odd. And if you can get the intraday chart, I think that will give us a better picture on that front as well. So keep an eye out on the currency space. Well, that's something that once we see some stability on that front, then maybe, in fact, the equity markets as well will stabilize. But for the time being, both the global bond yields spiking up, the dollar index as well, has strengthened big time. And the Indian rupee weakening, even from the day's low. I think today it went around 81.3, as the chart tells you. Moved back towards the low point of the day. Final 60 minutes coming up. Will we stage a bit of a pullback, or are we likely to break that 17,000 odd mark on a closing basis? Time will tell. First up, running you through all that we have. The big exclusive today. The Kirit Parekh panel seeks more time on gas pricing formula, says they have not been able to do justice to the review of pricing. This news sets stocks of IGL, MGL surging in trade. Exclusive details coming up. And credit card data sees a dip in spends in August, but SBI Card stands tall, clawing back market share of spends for the first time in the last 5 months. The stock trades in the green. Details coming up on the show. And we'll track the technicals of the market with Jay Bala of cashthekiosk.com. And that's not all. Ronak Omkar of PPFA's mutual fund will be joining in to run us through his portfolio bets and what he makes of the markets.
But first up, as always, Mitesh Thakkar is joining us for last hour calls. As we speak, the market is flat. I mean, it's off the highs, but at lower level, there's some buying as well. And I think there have been at least 4 attempts of breaking the 200-day moving average, and all have been sort of met with some kind of resistance or some kind of support in this case. So that clearly becomes your Lakshman Rekha now. Mitesh, hi, good afternoon. Rally is getting sold into, but Nifty holding the 200-day. What's your view, and how would you trade the last hour?
So, good afternoon. I think, the 200 average hasn't been broken, and that, entire zone of 16,990 to about levels of 16,940, which was the gap area. I think that's just about kind of holding on to them, just kind of giving support to the market, which is declining. My sense is that I think, one can believe that, fresh shorting should be done on the index only if we start getting below 16,930 and thereabouts, and then look at targets of 16,750 to begin with. So till then, I think cut a short position on the index, take profits. This is what I think, I said yesterday also. We are practically there. I mean, we are at the similar levels as we were trading yesterday. So we're not breaking down. But the structure is turn weak, which means that every rally, I think, you should possibly look at then shorting at higher levels. So closer to 17,200 is an area where I would be more comfortable taking aggressive put options bets on the October expiry, or even try an attempt short on the futures side. So that's the way we approach the index. On the stock side, ICICI Bank is something, which comes on the sell radar. It's trading at the day's low. That's the sell with the stop at 861 for targets of 825. And the other one is a sell on Motherson Sumi with a stop at about 114 for targets of 105.
Okay, all right. Thanks very much, Mitesh. Good speaking with you, and thank you for those ideas. Deepan Mehta is director at Elixir Equities. He's joining us now to take some questions. Deepan, good to have you with us here, as always. Thank you very much. Let's just start with what's happening in the city gas distribution companies with regards to apparently the decision that the gas price revision is not going to happen from the 1st of October. They need some more time in terms of the pricing methodology, etc. If this were to be delayed by some more time, the point is, won't some of the price increases which may have already been taken by these companies, the government may ask them to pass it on to consumers? Is it likely that these companies get to keep those gains with no real increase in input prices?
Good afternoon, Prashant, and thanks for having me on your show. I think these are very difficult questions to answer because government policies can clearly determine the fortunes of these companies. And although long-term potential is good with higher use of gas in transportation as well as home cooking, but it's a kind of a slightly sensitive issue, gas prices, given that consumer sentiment is involved. So government tends to side with the consumer, and that always at a disadvantage to the gas distribution companies. So I would say that these are companies which are typically utilities. They have seen some correction over there, but by and large, they've had a good, decent track record. So you may remain invested, but I think fresh investments are better off. It's more the other growth-oriented stories rather than gas distribution companies. And at any point of time, there could be some government policy which can impact their earnings in the short to medium term or even long term for that matter.
Okay, actually, Deepan, stay on. Let's revisit the story. Parikshit, of course, had picked this up on what the government's thinking might be come October 1st when the revision is supposed to take place. Parikshit, tell us what are you picking up?
Well, early in September, the government had appointed the Kirit Parikh panel to look into the gas pricing formula, and they were tasked to come up with a fair price for the end consumer. So the committee has been meeting, and it has representatives from different gas companies. And we spoke to Kirit Parikh some time back, and he said that we've not been able to do justice to the gas pricing formula to the review that we started 2 weeks ago. We need more time. This is an issue that affects a very large number of consumers, a large number of industries as well. So they will need more time to deliberate on this. So they've sought more time from the government. So this is what Kirit Parikh said. The APM prices are set for revision from the 1st of October onwards. We've reached out to the Ministry of Petroleum also for a comment on this. They are yet to respond. But the Kirit Parikh panel clearly saying they need more time to review this formula.
Okay, all right. Thanks a lot for that. Parikshit explains why all these gas stocks are buzzing in trade. Deepan, I wanted to focus on, the sector has been very hot. The cement space. Today, Ambuja Cements went down all the way to around 480. From there, it's seen a good bounce up. Doesn't take away from the fact that it's corrected from 580. But what would you do with these stocks? Some of them, if you bought them last week, say last Monday or Tuesday, well, you're down 20-25%. India Cements, Novoco, Ambuja Cements. You think this dip is a buying opportunity?
Good afternoon, Nigel. I don't think the dip is a buying opportunity. In fact, we are negative on cement stocks, and every rally is an opportunity to lighten up positions over there. We're going to see massive buildup of capacity, and the price discipline which the industry has been maintaining for so many quarters and so many years, that may get vitiated. So one needs to be a bit careful when it comes to cement. And no doubt, I think there are great prospects in terms of higher consumption, but when suddenly capacity comes in together, then that does create a problem. And at the same time, we have seen last couple of quarters the inability of the cement companies to pass on their cost increases, and we have seen that margins have compressed. And although there may be a mild improvement quarter on quarter, but still by and large, I think there would be some amount of pressure on the margins for cement companies. So keeping in mind the valuation which they are trading at, and mind you, they trade at very rich valuations. And given the ROIs, ROCs, I think it doesn't justify at least making fresh positions, fresh investment or trading positions in cement stocks at this point of time.
Okay, let's just pull out the chart of Tata Steel. Now, Deepan, very interestingly, Tata Steel, of course, had that stock split and bonus, right? And after that, we saw that rally in Tata Steel. It sort of topped out on the day they announced that restructuring. But adjusted to split, I think it's back to 970 now. What's the view now on the stock, Tata Steel?
Yeah, well, you know our view. We are negative on all commodities at this point of time: cement, steel, aluminium. I think the way the world is shaping up, you will see a lot of pressure on commodities. Already crude oil also has corrected over the past few weeks or so. And this entire slowdown in the global economy, macroeconomic factors in US and Europe and China, the way it is, I think that is not a very good positive outlook for steel prices per se. So I'd like to be underweight on steel stocks at this point of time. Optically, they are cheap, but they always have been cheap. And if you still want to buy steel companies, then you have to wait for that 0.8, 0.85 times price to book, when typically they do bottom out. And that, I think, is about maybe 10-15% away from the present level. So I would still not advocate buying into steel stocks, but there are some fans of steel companies, and the best price point would be maybe 5-10% lower from here.
Okay. By the way, just want to point out this decline that you're seeing in the currency may also be because of this Reuters report, which is talking about the fact that India's inclusion into the key the bond index has been pushed back to next year. This is a Reuters report which is citing sources and is talking about these issues. Remember, Prashant was highlighting that maybe it could come as early as this year, and if it gets pushed, then perhaps there's a bit of a disappointment on that angle, and maybe that also explains the bit of a reaction that you're seeing in the money market, at least both in the bond market and also in the currency market.
I would imagine if this is true, but this is a Reuters source-based sort of story. So we don't have confirmation from JP Morgan, but if this is true, remember the review was supposed to happen by the end of this month, usually by the end of this month or early October, and and that's what we highlighted. I don't remember a time in the last 10 years when the expectation for the fact that Indian government securities will be included in the bond index, and JP Morgan specifically, because the timeline for them to announce the results of a review was end September, was higher, at least in the last 10 years. So lots of expectation built up. I mean, that entire issue, the one big hurdle for the inclusion of these bonds, for government bonds, is that they're not present on a clearing platform called Euroclear, But even to that, I mean, at least what I heard from very senior bond investors is the fact that, because Russia got excluded and there is the index itself is very unbalanced, investors were asking index aggregators like JP Morgan, etc., we don't have a problem, you please include this. If operational issues are there, but it's for us to settle. You please give us the option to buy the bonds. So there was a serious expectation that this would come through. So we don't know for sure. I mean, we're reaching out to JP Morgan for officially asking if the review is over. But Anuj, what you referred to is that Reuters story.
Absolutely. The report also says, by the way, it's only for operational purposes. The point you made about the settlement as the platform, because investors prefer such platforms, but India wants to settle bonds onshore like China. So that's also another factor. Let's do one thing. We'll take a break. I mean, it has had an impact on the market for sure. So that's why thought we should put that out. We'll take a break. We'll come back with Jay Bala from CashTheKiosk.com to discuss the market technicals. Also, we'll be joined by Ronak Wankar of PPFAS Mutual Fund to discuss their strategy right now in the current market.
Right, we got 27 points lower on the Nifty, 16,989 at this point in time. And the flash that we were discussing and we were talking about, Reuters reporting that India's inclusion into the key global bond indices, JP Morgan in particular is where the expectation was, has been pushed out. The Reuters story saying that some of the issues which we were just highlighting, the unavailability of Indian government bonds on international clearing platforms like Euroclear, those are issues which still need to be addressed. And I mean, the copy of the story says early next year. So we don't know. Usually the review happens in September, October. And as I was explaining earlier, there was a lot of expectation that this should come through this time around after sort of Russia was thrown out of the index earlier in March of 22. Deepan Mehta is still with us. Deepan, any thoughts you want to offer around this? Would have meant a lot of inflow, supporting bonds. I mean, meant good for currency as well in terms of an external source of funding.
Absolutely. I think all of us are looking forward to this particular inclusion, and hopefully it's just a matter of time and all these administrative settlement issues should get sorted out. And that could mean good long-term flows coming into our markets, positive for interest rates, as well as positive for stock markets as well, because you always prefer stable currency rates. So let's just wait and watch. I think it's just a matter of time, maybe a quarter or so. And this particular event, I think, will be very positive. In any case, I think India is the flavor of the global markets, the way we have outperformed on the equity and the currency side. And that certainly will whet the appetite for a lot of bond investors who want to invest into India. So, I heard you say that there was a clamor to the agencies to include the bonds and somehow make it possible. So hopefully this particular proposal, will actually fructify in the near future.
Thanks a lot for joining us and have a good evening. That's the word from Deepan Mehta. Let's invite our next guest. Jay Bala is joining us from CashTheKiosk.com. Jay, good afternoon. Thanks for joining us. You've been bearish for some time, Jay. What's your view currently after the kind of decline? Yesterday, the S&P sort of protected the June lows by all of 8 points. Of course, in India, we're still some distance away from the June lows. Dow Jones is already there. But your views?
Yeah. Thanks for having me on the show, Anuj. A couple of things what I said last week is actually playing out. And I said the lows for the US markets is just a matter of few days, probably end of Friday, and the Dow took out the 2022 lows. And I said the Nifty in all probability has stopped and it's likely to get lower. But I believe the markets are heading much lower from here, in Indian markets as well. And the outperformance that it saw in the last few months, it's probably come to an end. And although a few markers needs to be crossed, But the important thing is, frontline stocks and darling of the, bull run like Adani Enterprises, they are even showing signs of, at least going through a short-term correction. So the markets have, in all probability, rolled into a, sell-on rise mode, and rallies are likely to be short-lived. So the markets that I spoke about, we need to see the Nifty break below 16,900. Once that's done, the probability of markets going higher will dissipate rapidly, and a print of 16,752 will completely eliminate all possibilities and put the focus on the June lows.
Okay, all right. Hi, Jay. Noted that point. Sell on rise till we get past the 17,500. On the downside, 16,752. We should get some of these levels up for our viewers on the screen. Jay, just deviating from the equity markets, what about the currency space? The dollar index, it's moving like a bull. Above that 113 overnight, 114 plus is what we saw. Your view on the dollar index, I'm not sure whether you track the Indian rupee, but if you do, then a level on that as well.
Very much track the Indian rupee, Nigel. See, the dollar index, there are two baskets, including the global basket and the Asian basket. Both of them are showing very strong signs that the dollar rally isn't ending. Probably in the short term, it's a little bit overcooked, so you might see a little bit of bounce, but that'll be just that, just a bounce, a short-term bounce. If you look at the Asian dollar basket, it's heading very close to the .com level, so it's further weakness. And it's not ending, and we're probably going to go and see the Asian financial crisis lows. And somebody had put out several weeks ago how whenever the dollar index rallies more than 20%, it leads to, it's a precursor to a crisis. So, it's there on Twitter, you can Google it and search for it. But, when it comes to the rupee, I put out a note in 2019, not anything to do with the Fed tightening. I know that the long-term, trajectory for the Indian rupee is somewhere close to 96. And and I had projected 2020 to see record highs and 2022 to see somewhere about 86. It's a bit slow on the clock, but it's really heading there. But the direction of the trajectory hasn't changed.
Right, got that. Sorry, on the dollar index, Jay, afternoon. What do you think we are getting at in this move?
Yeah, when the euro broke parity with the dollar, I put out the medium-term forecast too. On this channel, I said it's heading somewhere close to 115 to 120 in the medium term. But the rally has been so strong that's being met in the short term. We saw a rise of about 114.5 yesterday. So as I said just a few minutes ago, in the very short term, it's excessive. The sentiments have become excessively bullish. That's going to lead a little bit of froth to get taken out in the short term. But the medium to long term projection is about 138, and this is going to probably be coincident with the US 10-year yields, for which I have a long term projection of 565 bips.
Okay, what about the Indian IT stocks, Jay? Because they are in a bear market, pronounced bear market now, for better part of last 6 months. Most of the stocks have corrected over 30%, some over 40%. Case in point, Wipro. Your views here?
Yeah, it just needs to do one more sequence of low, Anuj. And when it's doing that, if it manages to hold 24,400, it'll be very bullish for the medium term. So watch that ballpark, just below 25,000 mark on the Nifty IT index. If in the next sequence of lows, if it does that and holds that, that'll be pretty bullish. And most of the IT stocks will be an ideal, buying point. So, but if it doesn't hold 24,400, we need to know what the market is going to do. I think it's going to go closer to 20,000. That's not my view at the moment. I think 24,400, but I will be very careful if it doesn't hold that.
Well, Jay, what about the pharma stocks? Yesterday in the markets were getting trounced. The pharma index was one of the lone indices that were trading in the green. Weakness on the Indian rupee, maybe bulk of the bad news in the price. How's the index shaping up, and what are your picks out there?
Yeah, the pharma sector is looking pretty interesting. At least it's likely to provide a short-term trading opportunity. There is relative outperformance visible in Cipla and Sun Pharma. But if the pharma index manages to take out 12,900, I think there is an opportunity for a play out there, at least for a short term, somewhere close to 14,400 mark. But there are already some of the stocks which are already showing good signs, something like a Dr. Lalpath Labs from the diagnostic space. So if you want to preempt the market, as long as Dr. Lalpath stays about 2260, it's bullish for a price objective close to 2900 to 3000. So, pharma is looking pretty interesting. Maybe it's a play on the defensive.
Okay, pharma, play on the defensive. What else? Where else are you seeing trading opportunities, one way or the other, both long and short, Jay?
Yeah, the important sector that's actually on the verge of breaking down, or it's probably already broken down, is the auto sector. Auto sector is trading below 12,600. That's a negative. I've been pointing out it shouldn't trade below 12,600. It's done that. Tata Motors, watch out for it. It has broken below the trend line from October 2021, and it's trading below 430, 427. So, that's a negative there. So probably some of the two-wheeler stocks are also clocking lower lows, Bajaj Autos and TVS Motors. TVS Motors is a bit excessive on the higher side. If it were to break 1,000 mark, I think it's going to correct somewhere close to 850 to 800. So that might be a playing opportunity with the stop above 1,080 for TVS Motors.
Anything you're bullish on, Jay, right now?
Yeah, I'm bullish on something like Cholamandalam, and Dabur. Dabur, is again probably a defensive play for the markets in the short term. If Dabur were to take out, I think it's 580. I think it's heading for 650 to 720. So probably wait for if you're conservative, wait for a break above 580. If you're aggressive, the stops need to be somewhere below 520. But if it breaks 580, the stops can be upgraded to 550.
Okay, Jay, thanks a lot for joining us. Good talking to you as always. The Nifty is once again back below the 17,000 mark, and the real culprit today once again has been the Bank Nifty, which is down full 1% now. ICICI Bank, HDFC Bank, HDFC, Axis. Keep in mind, today is the weekly options expiry on Financial Nifty, which has started to generate massive volumes on Tuesdays. So that could be another factor playing out. Ronak Onkar is co-equity fund manager and head of research at PPFAS Mutual Fund. He's joining us now. Ronak, hi, good afternoon. Thanks for joining us. Been a very sort of resilient market, right? I mean, we tend to look at, we all have recency bias, but, in a market in which the US market is at 52-week lows, our market is practically within just 7-8% of highs. But what have you made of the recent volatility, and as an investor, how are you approaching it?
So thanks, Anuj, Nigel and Prashant for having me. Good afternoon to all of you. So of course, yeah, the US market has been unusually volatile, but it should be expected because it has risen to quite a high in a very short period of time. If we compare especially the last 2 years. So this correction has to be expected. Most interestingly, the trend of having free capital, cheap capital available to expand, any valuations were okay. That era seems to have come to an end in many of the businesses which could not have their own cash generation machines inside the businesses. In India, however, some of the decent companies which have been trending upwards are cash generating positive free cash kind of businesses, and over a long period of time have shown profitability. Some of those companies are still valued quite expensively, or I would say reasonably. But interestingly, it remains to be seen that there are some pockets where valuations are still attractive, and we have been adding them over the past few months.
All right. Hi, Ronak. Afternoon. Good speaking to you. Ronak, I'm looking at your top 3 holdings. A few months ago, ITC was in, top spot. Now it's moved to the 3rd spot. And HDFC and Bajaj holdings, well, they have moved higher. The top 3 stay the same, but the order has changed. Have you rechecked the portfolio a little bit, taken some money off the table on ITC, or the other way to do it is maybe you've increased your weightage on HDFC?
So portfolio allocation continues to happen. So ITC was very close to breaching the 10% mark, and we did not want one stock to dominate too much of the portfolio. So we trimmed that a little bit. So that's why the percentage allocation in ITC has come down. However, if you see the allocation to HDFC Limited, it's because we have moved from HDFC Bank to Limited on owing to the merger. Essentially, if you see the banking exposure that we have, it's close to about 19% now, compared to what it was 2 years back, about 8 to 9%. So we have reached that portion of the portfolio. Bajaj Holding has been a long-standing investment for us. It's a bet on the underlying companies in Bajaj Group, which is Bajaj Finserv and the auto business.
Right. Ronak, for those who want to be a little opportunistic with regards to exposure to global equities, is this a good time? And what's the best vehicle to do it? I mean, you own some 25-30% of your portfolio is in global equities. But how are they looking? I mean, sure that you keep track of where valuations are, but I think your exposure is to very large mega tech names there, right, in the US. How are they positioned now after the fall?
Yes, so we own the larger tech businesses. The only distinction of the tech businesses we own is that they have their own cash flow generation capability and they keep funding their own projects with their own cash flow. For exposure to international stocks, I think in the fund we have close to 20% investment right now. The overseas limit has not been opened yet for mutual funds to invest. So till the time the limit is there, we will continue to invest new capital in the domestic companies. But international piece is there because the valuations are attractive. There is no point in selling these companies. They're very good businesses with longer term trajectories. And if individual investors do want to invest globally, there is an option of directly investing through the LRS route. So that is one way people can expose themselves to the US market or global markets.
And what's the best kind of route to do that? I mean, with all that is happening in the NASDAQ, which is corrected so much, I'm sure people would want to know what. I mean, so mutual fund route is tapped out with the limit kind of full up right now, and we don't know when that will open up. But through the LRS route, what's the best way to do it, in your opinion, Ronak? And are stocks attractive? Go on.
So in mutual fund route, if you see the existing investments, if the fund is retaining an allocation, then you still get the exposure in the NAV, right? So the NAV does incorporate the values of the global as well as domestic stocks. In the LRS route, I think buying individual stocks is better, or you can also buy funds globally or fund of funds if you want to diversify the exposure. So that is one way of doing it. So there have always been these multiple options available. It's just that the mutual fund route cannot incrementally invest in global stocks. But the existing investments can stay in the fund and it will be a sizable allocation.
Okay. The other large holding that you have is Power Grid, right? And it's done well for you, Ronak. One of the few PSUs which did well. But, you know, there has been a bit of a flip-flop on, you know, the REC stake. And you know whether Power Grid will be told to buy, and then there's been clarification. But you know, do you get a bit disappointed with such sort of events? And I sort of going to keep the faith here in this investment.
So in PSUs, right since the beginning, we have this stance that all PSUs may be owned by the same promoter, but there are some PSU businesses which are actually run very well, and they have a long legacy of good operating businesses. So in the past, we used to own the city gas distribution businesses in the mutual fund scheme. And this time we have Power Grid, Coal India and MDC kind of PSU businesses. So it's disappointing sometimes to see that there will be some policy overhang on these companies. And that has been the case. So it's nothing new in PSU businesses. This is one of the reasons why it's important to pick the right PSU businesses which might have a good trajectory of the underlying business. And over a period of time, you have to weigh the risks and your allocation based on what the policy changes might happen. So it's a constant tug of war, I would say.
Other bit I wanted to ask you about was on IT, because I think you have HCL Tech, which is in your both your schemes, and Wipro I think is also reasonable holding in one of the schemes. So after this fall, are they looking attractive? Because the big debate is about valuations, right? That if the margins are back to pre-COVID levels, why should valuations not go back to pre-COVID levels? And valuations still are at about 30% premium.
So if you see the valuations of some of the larger IT companies, they have become more reasonable in the past few months. They have corrected. Probably the market anticipates a recession on a global basis, and which will affect the overall IT spending globally. But the way we look at IT companies, although they are attractive across the board, but some of the larger IT businesses which are more diversified, they provide you a lesser downside in terms of losing the business if something goes wrong with a few clients. Whereas in smaller or mid-sized IT companies, where the concentration of clients may be higher, or dependence on a few technology areas will be higher or vertical will be higher, that might suffer if there is a significant crunch in revenue in the or IT spending globally. So I think larger IT businesses have been stable and they have consistently delivered over a long cycle. And there have been moments in between where the growth has stagnated or flattened out or even degrown in a few years. That cycle continues to happen. So we have to brace for all these cyclical events.
Okay. All right. Ronak, thanks so much for stopping by and giving us your view on a whole host of sectors as well as stocks. Looking forward to chatting up with you rather soon. Well, we'll be having that chat. The Nifty actually moved to the low point of the day, but it appears there is some bit of fight that's coming in at around that 16,960, 16,970 odd mark. Let's see whether or not on a closing basis we can defend that. But, a couple of stocks moved to the day's low when we were having the chat. Adani Ports has moved a little bit low. Ultratech Cement as well, that was trying to pull back. That's moved a little bit low. And L&T as well has taken a bit of a knock in the last few minutes. Well, we'll slip into a short break. As always, Nimesh will be waiting for you on the other side. He'll tell us what's going on in dealing rooms. We'll also get our technical experts back in to give us their view on the markets as well as individual stocks.
Welcome back. Well, the market is once again gravitating towards the low point of the day. It's just that it's still not giving up on the 200-day moving average on a conclusive basis. 16,987 is what you have on the Nifty right now. The 200 is placed at 16,992. We have Nimesh joining us now for dealing room check. Of course, D-Street chatter. Nimesh, tell us what you picked up.
Hi, Regina. It's another day of volatile trade, and that's going to be the case till the expiry. That's the overall feedback. But it looks like the bulls are trying very hard to defend 17,000 on the Nifty. That's going to be a very important level, psychological level as well, from a bull's point of view. In terms of flows, we saw yesterday the kind of number the FI sold close to 5,000 crores, and looks like that's going to be the trend today as well. Maybe a bit smaller amount, but again, the FI seems to be on the sell side. The biggest drag is in the financial names. Remember, today is the weekly expiry as well, so that's also putting some bit of pressure in the financial stocks. Like yesterday, even today, the feedback is there is a market at close basket buying in some select names at the leading FI desk. So that's going to be, at least some stocks will see some, buying interest in the last half an hour. That's overall feedback. The one sector which has seen a bit of relief rally is technology, and it's largely on short covering. So not big buying interest, but looks like there is a bit of short covering in the technology stocks. That's been the trend for the last few days, and that continues in today's trade as well. So expiry week, and at the same time, there is the RBI policy that's going to have a big impact on the financials. But looks like the bulls are trying very hard to defend 17,000 on the Nifty in today's trade.
All right, Nimesh, what about individual stocks? What are you picking up?
So in terms of individual names, Nigel, the first stock is Max Financials. That stock has actually been under pressure of late, and the strong indication is that there's going to be a large block deal very soon in Max Financials, and most likely the promoter entity is going to sell some stakes. So that's Max Financials. That's the first one. The second stock is Ramkrishna Forging. I understand a leading HNI investor was an active buyer in today's block deal. There was a 1% equity which changed hands, and looks like the disclosure will be important. But I understand a leading HNI investor was active buyer in today's block. That's the second one. The third stock is Infosys. Well, I spoke about there is a small basket buying. Infosys is one name which is where there's going to be a small buy flow towards the end from a leading FI desk on market at close. So Infosys is slightly buzzing on back of that buying support. And the last stock is Lemon Tree. Again, there was a large block in Lemon Tree as well. And I believe in Lemon Tree, there was a leading FI long-only investor who sold in today's block deal. So again, even in Lemon Tree, the disclosure will be important. But I understand a leading FI was a seller in today's block.
Okay, interesting names there. Thanks very much, Nimesh. Max, of course, is something where Nimesh highlights, in all likelihood, maybe some promoter selling. It's been a huge underperformer, even compared to the rest of the life insurance stocks. 769 on Max Financial and a bunch of others as well. Let's get Mitesh in to talk us through what trades he would want you to take. Mitesh, hi, afternoon. What do you have?
So, Prashant, I think, the market hasn't broken down consecutively. Now, for 2 days, I think we are holding on to that level just by the, just by the way. I think, it's a situation when, you can possibly get a stronger bounce back than what we've got. And therefore, I think, we are advising taking off short positions and now shorting only below 69.30. On the stock side, I have one buy and one sell call, given the fact that we are somewhere at the edge. IGL has bounced back very well in the last 1.5 to 2 hours. So that's a BTST with the stock at about levels of 417 for targets of 430. While REC is something which continues its negative mode. So STBT here with the stop at about 98 for targets of around 94.
Okay, all right. Thanks a lot for that, Mitesh. By the way, from the broader markets, I think you have Muthoot Finance, one of the stocks that's up close to 5.5% as we speak, moving to the high point of the day. Market's a little bit wobbly, but select stocks doing pretty well. And Muthoot is one such stock that's piling on the gains. Talking about stocks that are gaining, well, let's talk about a couple of stocks that are moving around. SBI Cards, that's the stock in focus on the back of a good performance in the month of August. Abhishek joins us to fill us in with more details. Abhishek?
Well, Nigel, RBI has given out the data of credit card business momentum in the month of August, wherein the performance of SBI card is better than the industry average in terms of the number of cards issued, that growth on a month-on-month basis, as well as the spends which have grown for SBI cards. So total cards is up about 2% on a month-on-month basis versus a decline of 2.8% that you are seeing for the industry. The total spends are up 1.24% on a month-on-month basis. That compares to a decline of 3% that you are seeing at an industry level. However, average spends per card is down about 0.8%. That compares to about 0.2% decline that you are seeing on a month-on-month basis for the industry as a whole. No taking away from the fact that, in terms of card issuances, they have gained market share for the first time in last 2 to 3 months. So market share now stands at 19.02% for the month of August. That compares to 18.1% that you had in the previous month of July. Even in terms of spends, they have gained market share for the first time in last 5 months. August market share in spends was around 17.4%. That compares to about 16.7% in the month of July. So all in all, a good strong business momentum coming in for SBI Cards in the month of August. Back to you.
Okay, thanks for that, Abhishek. Well, I just want to point out the extent of Bank Nifty's weakness over the last 3 or 4 days. Why is that important is that if you look at the month-to-date performance, the Nifty is now down 4.25%. And despite the last 3 days of near collapse in the Bank Nifty, it's down about 3%. That was the extent of outperformance before this decline began. IT index, for example, is down more. It's down about 4.5% or so because in the first half, it was a bit of a reverse. Now for the last couple of days, actually, IT has managed to outperform. Despite that, the Bank Nifty has shown some bit of disproportionate move. Kunj Bansal is joining us now. Kunj, hi, good afternoon. Thanks for joining us. What's your view on the large financials first, Kunj? Because that's where we had a very nice rally building in, all through the month of August and maybe the first week of September as well. But after that, things turned.
Yeah, so let's also put in perspective the fact that the outperformance or the performance in the financials came in last few months after a reasonably long underperformance of almost 18-20 months or so before that. So I think it's just the beginning. I don't think that with this correction that has the top been made or as the performance or outperformance will be over for banking stocks, especially large financials. I don't think so. In fact, if we look at the credit growth rate, it's at the 16% plus, which is almost 10-year high, 9-year high to be more specific. Of course, we have credit policy coming in. Let's also keep in mind so you were giving rightly the numbers that month till date we are down on Nifty about 4%. Before that, if we go in July, we were up 9%, and in the month of August we were up 3%. So that's 9 plus 3, 12. Not that we can add it. And from the June low, we were up more than 15-16%. From there, market was to correct, and it was good that it corrected. And in a falling market, high beta like BFSI banking will correct. But I think my view continues to remain positive. Whenever we will see market turning around, we will see buying first coming into these stocks. Credit policy is one of the factors that we will know on Friday. So that's a slight short-term hiccup, if at all. Although I don't think there'll be any negative surprise. There certainly won't be more than 50 basis point hike in the RBI policy. So even that is not a very big negative for me. So the view remains positive.
Right, hi, Kunj. Good afternoon. Kunj, what's your view on these gold finance companies? As we speak, Muthoot Finance is rocketing up. It's up close to around 5.5–6%. Any view on any of those names, Manappuram or Muthoot, or do you want to play it via some of those other banking names that have high amount of exposure to the gold finance theme?
Yeah. So with the disclosure that I own both the pure gold financing companies, Mannapuram and Muthoot, obviously that shows that my view on a medium to long term is positive. But let me also put in perspective that we have seen a very sharp underperformance from both these stocks in last few months, let's say 8 months or so. In fact, as we were just discussing, that despite the banking sector has started to outperform in last 2 months or so, the same has not been the case with these. In fact, if you leave aside today's 3-4% rise in Muthoot Finance, it was at a 52-week low yesterday or day before or something like that. The main reason for that last 2 quarters, the numbers for these companies were not as good. The other thing is that the gold price has been coming down marginally, if not very sharply, or earlier it was flat and has been coming down. So their prices, the stock prices of gold finance companies is also linked to gold prices, because the valuation of the gold reserve that they have straight away comes down, or if the gold prices start to go up, that valuation goes up. So although they have enough margin in terms of loan to value, but still sentimentally market does take it that way. So in terms of a specific view, since as I told you, I hold them, in terms of valuation, they have corrected very sharply. The numbers should start correcting. It's quite likely that we might see good growth in September or in December quarter, because we will be in the festival season. So typically demand picks up. In banking sector, we have already seen credit growth picking up. So part of that should reflect in the growth of these two companies also. So for any medium-term view, medium-term holding period, my view continues to remain positive, although both the stocks have been affected by short-term developments.
A huge underperformance, down 30% for the year, even after today's 6%.
That's right.
So just absolutely crazy. Z, any thoughts? It's making a bit of a move, 3% higher. I mean, the market has been waiting for that CCI approval for some time. It'll come when it comes, one way or the other, but your thoughts?
So it's a great stock for traders. The trading horizon, sometimes one gets intraday movement also, sometimes intra-week, intra-month also. But the long-term price chart of the share itself will show that it's not a stock for medium-term investors. Those investors who want to buy and keep for long-term, or who want to buy and sleep on these. A lot of news flows keep coming, a lot of triggers keep floating around and there. Some of them are right, some of them obviously are rumors. So it's a great stock for traders, and I think accordingly traders with their strict stop losses should continue to trade. But in my view, medium-term peace-loving investors should completely avoid this stock.
You said sleep-loving investors, right? I thought peace-loving investors.
Earlier I said who want to sleep, and then I said peace-loving.
Okay, now got that. We'll take a quick break here. Go and stay with us. 10 points or so, 11 points. It's come back into the green. Nilesh was telling us that towards close, what's called, market at close, sort of inflows perhaps, and that seems to be happening. He specifically mentioned Infosys. Let's look at if we've got a bit of a move there. Yes, it is. So Infi is up a little bit, and the overall market has come up a little bit as well, some 25 points. We'll take a very quick break here. There's still, 10 minutes to go for close. More market chatter on the other side. Okay, absolutely flat. 5-point change on the Nifty is how things are sitting, with about 6 minutes to close. Earlier in the day, we caught up with Nilesh Shah, Managing Director and CEO at Envision Capital, who said that it's a good time to start accumulating IT stocks. He doesn't agree that it's doom and gloom for that particular space. Also a little bit about his overall market outlook. Listen.
The valuations, the P multiples have become a lot more reasonable. And our view is essentially that don't expect the margins to further deteriorate from the current levels. The demand environment still is pretty much intact. We've not heard of any IT companies talking of any slowdown in terms of demand. Even if we reflect back to the past crises which markets like the United States or Europe faced, even in that kind of an environment, the demand for Indian IT services companies was pretty much non-discretionary. So to that extent, we now see an environment where the demand is intact. The margins perhaps have moderated or have bottomed out, I'd say, and valuations have become a lot more reasonable. So from here onwards, we don't expect the IT sector to be an underperformer. I think it's a good time to start accumulating a lot of high quality, growth-oriented IT stocks. I still expect India to be an outperformer in context of what's happening globally. Just look at some of the growth estimates. The fact that GDP growth is still expected to be 6 to 7%. Inflation is going to be still subpar what we are seeing in developed markets, and at about 6 to 7%. We're still talking of nominal GDP growth of about 12 to 13%. And with margins now expected to improve because of the way commodity prices have fallen or the raw material and input prices have fallen, expect margins to probably kind of hold up or even get better over the next 2 to 3 quarters. So overall, the way we look at India is that we see a nominal GDP growth of about 12 to 13% and maybe an earnings growth which is in probably the high teens. Autos continues to be one of those opportunities of growth from an India context. I think combined basis autos and auto components is a space we've been pretty optimistic about. We've been owning it in our portfolios and continue to like this space. Of course, some of them have run up quite a bit, especially in the auto ang space. So of course, you could probably take some profits off the table, but otherwise, it looks that for the next 2 to 3 years, Indian autos and auto components put together are kind of going to be on a comeback trail. Some of it is priced in. We're getting into an environment where we could probably see a double-digit growth in demand backed by margin expansion, which I think is pretty good in terms of earnings growth from a 2 to 3 year perspective.
Okay, that was Nilesh. Let's start wrapping up the market action. Kunj and Mitesh, thanks a lot for joining us and taking us through the market close. The market's closing at a very interesting point. The last few minutes, by the way, very sharp recovery in the Bank Nifty. Just pull out the intraday chart of the Bank Nifty and maybe even the Nifty Financial Services Index. I think when we started 3 p.m., the Bank Nifty was down 300 points. I think that loss got cut to just about 100 points. That's the Nifty, of course. But the bigger index to track is, there it is, the Financial Nifty and the Bank Nifty. Very close to 200-day moving average. Rallies getting sold into, but declines getting arrested at 200-day moving average. That's how the day played out. In terms of individual stocks and sectors, IT stocks did well, especially towards the end. So Infosys, TCS, Wipro, HCL Tech, in terms of index contribution, did well. Cipla, Shree Cement, Tata Consumer, and Power Grid were the other stocks where we saw 2% gains or more than 2% gains. BPCL, Grasim, ONGC, ITC and Lever were the other stocks where we had some gains. On the downside, you had some of the big banks, SBI, Kotak, HDFC Bank, ICICI Bank, which were weak. Hero MotoCorp was your top loser, down about 3%. Adani Ports down 2%. What else? Tata Steel and Titan were also down in trade. But the broader market actually did behave itself today, Prashant, after last couple of days of weakness.
Yeah, I mean, so 1,200 stocks higher and about 950 stocks lower. That's the NSE advanced decline. So IGL, the city gas distribution companies, Gujarat Gas, IGL, MGL all did well, 6-7% each. Muthoot Finance, we were talking about that huge underperformer which came up about 6% by close. We had all cargo logistics which went up 7%, 391. Mazgaon Dock 6%, 444. Aster DM was up 9%. There was GE Shipping which ended at 525, 7% higher. Liberty Shoes was up 17%. That's a big move on Liberty Shoes. 252 on that one. Tata Investment, which did very well the week before last, that came back about 5.5 higher. Solar Industries 4.5% higher. Arvind Fashions about 10%. Mirza International, I mean, actually, a lot of these footwear companies are back into rotation. Metro and Campus nowhere to be seen, but the other two are doing well. Not Bata, of course, also not in the gaining list today, but lots of action in the broader markets. Nigel.
Well, that's right. It wasn't so much doom and gloom, actually. Broader market stocks are buzzing around here. Jacket, the Japanese promoter out there, that was up close to around 13.5%. That's JTE KT. So keep an eye out on that stock. STC was up more than 10% in trade today. A couple of other notable gainers. Philatex India, will try to get the management tomorrow on the show. That one as well was bouncing around. Sri Lanka Industries up close to 10% in trade today. Russell India as well up close to around 7%. HCC, there's a bit of a relief in terms of their debt restructuring. Well, the stock was off to the races, up close to around 20%. So to wind things down, well, the Nifty, on a closing basis, I think the average number should be more or less flattish because there was a recovery of around 50 points in the final 30 minutes or so. Averaging, the Nifty should end mildly in the green with a flattish bias. So 17,020 odd. I think that should be the closing rate that we should be watched for. We'll get that in just a bit. The mid-cap index up 0.4%. That was the star performer today. While the Nifty Bank at one point of time was down 350 points. Well, by the time we wound up, it was down only around 100 points. Well, on that note, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Our Tuesday special, Commodity Champions, comes up next.